everyone. This is Russell for us again for a new weekly webinar on another important topic. I'm going to want to meet everyone so that if when I finish one part, if someone wants to talk, we can just, who's mute? Okay, I think everybody is mute now. So again, this is Russell for us. Today I have a new topic that I want to share with you guys concerning how to actually pay less taxes, but most likely how to take advantage of the strategy that are within the law, right? Because like I was saying before the beginning of the life, it doesn't matter how much you pay taxes, right? The government will never say thank you to you because you are just a such good customer because you pay a lot of taxes every year. Instead, the government may still think that there are some way that you may have avoid paying taxes illegally, because avoiding paying tax legally is a law. It's just use what is available for you, right? So last week we talked about how to it was a strategy on how to use income-free, tax-free income to save taxes, right? One of those at the end, one of the solution was to actually pay yourself as a business owner, because a lot of business owners are just operating the business, but they don't even know that they are actually like a resource to the business. They see the compensation as being the profit of the business, which is a mistake, because as a business owner, the profit of your business is not your payment, it's not your own compensation. That is what is called a return on investment. You are investing, return on investment. That's return on investment. You are investing money, investing your time, investing a lot of resources to get something at the end of the year. If at the end of the year you have $50,000 as a net income, that is not your salary. If you have $50,000 net income, out of the $50,000, if you pay yourself only $30,000, it means your real net income is $20,000. Right? Simple. Your real net income is, it doesn't matter the structure of your company. Your real net income is $20,000. It means you have paid taxes on $30,000 just for nothing. It doesn't matter.
Hello.
Yes. Yes.
Hello.
Yes, Adeline.
Allô?
Yes, I can hear you.
Allô?
Oui. I can hear you. If you want to talk, you can just talk. Yes, I can hear you. Okay, I'm going to mute everyone again. So I was saying that if you have your net income was, Carol, you want to talk? You have a question? Yes. Yes, Carol. I can hear you, Carol. You have a question? Carol.
Hello?
Yes, yes.
Hello.
I can hear you, yes.
Yes, I'm here.
Yes. You have a question?
I did not hear you.
Oh, I was mute. Oh, Madonna mia. Oh, sorry. Can you hear me now? Can you hear me now?
Hello?
Yes. Can you hear me now? Hello? Can you hear me now?
Yes, I hear you.
Yeah, I don't know where I got cut off, but I was just saying that whenever you are doing business, or even though you are not a business owner, you are just a single taxpayer, individual taxpayer. Whenever you have an opportunity to save in taxes, to have to act the way that it will help you to save taxes, always take it, because the government will never say thank you because you are such a good customer. You are not a customer to the government. To them, it's an obligation. It's not an obligation for living in the country. It's an obligation for you to pay taxes. You are not a customer. That means whenever you pay taxes, it's like you are just doing your part, right? So you know the customer. If you are a customer, you will receive a thank you email to say, okay, thank you, you have received your taxes, you have received your payroll taxes, you have received your sales taxes, you have received your income taxes. You will never receive such a mail or email, because to the eyes of the government, it's your part, it's your job, it's your part, it's your, you do your part as being a citizen of the country. Yes. That's the reason why not being a customer, whenever you see that you can actually pay less, the little amount possible, legally, always do it, right? Always do it. Last week I explained some stuff on how to, as a business owner, pay little or less taxes. I explained that last week, and one of the things that I was explaining was that a lot of business owners, they don't account for their own job within their business, right? You don't account for your job. When you say, okay, I have 50,000 profit, in fact, you don't have 50,000 profit. That means you are overpaying taxes on the profit, you are overstating your profit, because 50,000 will never be your profit. How much did you pay? Okay, the time that you put on your business, who paid you for that, right? If somebody was to do that, you will have paid the person. As soon as somebody was doing that in your own business, you will have paid the person. Unless maybe you are not managing the business, you are just like a shareholder of the business. Maybe you hire a manager to do it. But if you are actually involved in the conduct of your business, you have to account for your compensation. After we have a whole video last week about that. The point is that $50,000, if that is your compensation for the year, in fact, if you only assume that you pay yourself $30,000, your real profit is $20,000. That means you have overpaid taxes on what? Let's say you are on the first tax bracket, 10%. That means you overpay taxes by $3,000. And I don't even know the other source of your income, because the tax law is within the bracket. If you belong to a higher tax bracket, that you are even around the 20% as average taxes, that's 60,000. That's 6,000 that you overpay. Overpay doesn't always mean that you remove the money to pay. Overpay tax by 6,000 means what? It means that if you have received a refund for 2,000, it means you will have received a refund for 8,000. Because you have to add this. That's what it means. If you have received a refund for 2,000, it means you will have received a refund for 2,000 plus the 6,000 that you lost. That's basically what it means. In the other way, if you pay 10,000 as taxes, it always means that you will have paid only 4,000. Because if you have taken this opportunity, you will have saved 6,000, then you will pay only 4,000. That is what it means. And there are so many opportunities, whether you are a business owner or you are an individual taxpayer, right? So today, I'm going to bring another layer to this, because I couldn't go to it on the last meeting, last Sunday, right? The new layer here is what? Let me clean this up first. Is that most of the time, we are a family. Right? Everybody here belongs to a family. Nobody came from the tree, basically. Right? Nobody came from the tree. You have a family, you have a father, a mother, you have brother, sister. Chances are that you have a spouse. Chances are that you have children, right? So now, how to use those family members as a tax strategy to legally pay less taxes. That's the point of today's webinar. So, the topic was hiring family as tax strategy. As a tax strategy. So how does how does hiring your family member being a tax strategy? What is funny is that almost everybody does that, but everybody does that under the table. Let's call it like that. A lot of people do it, but they do it under the table. When you have a business, in so many points, sometimes your husband will get involved in your business, maybe to help you with some type of stuff. Sometimes your child will help you in your business, right? Sometimes your mother will help you in some part of your business. Now, how to actually account for that? How to take advantage of actually using those people and actually put them in your business? Like actually taking real advantage of using them in your business, right? That is today's topic, basically. How to do that. And that is why we're going to explain all the options that you have, right? So if you have a family member that sometimes help you, or you don't even know that they can help you because you don't know how to take advantage of it, or some people even use them and even pay them, but they don't take advantage of it, or they don't even account for it, or they don't take the deduction for it. Yes, I have some people where if you have to send your son or your brother or your mother to conduct some type of business, maybe go and deliver some stuff. Sometimes you pay the person, right? You may pay the person or pick up your children from school because you are in the office. Sometimes you even pay them. It happens a lot of times that you have to call a cousin that, can you do this for me, can you deliver this? Then you pay the person, right? But the point is that very few people actually account for those type of expenses, right? So there are, I'm gonna disclose here 3 possibilities of taking those advantages. The first one will be what? The first one will be your child employed by the parents. By parents. So basically, of course, your child, you can hire your child, right? You can hire your child employed by the parent. This is the first thing. The second one is what? It's hiring your spouse. Your spouse. A lot of people will get themselves involved in the husband or wife business. So you can just hire your spouse in your business, like legally hire your spouse in the business as a tax strategy. Not because you just don't know who to hire in your business. Because using as a tax strategy is important, right? Because you know why you are doing it. When you hire just a worker, you don't know tax-wise why you are hiring the person. You are hiring the person because you need somebody who is skillful to perform the task that you have. That's the reason you hire the person. Now, having a family member like your child or your spouse, you should have in mind why you are doing it. It's not just because you are looking for someone that will perform the job. Because, of course, your child will not perform the job just like the same way that a stranger will perform the job. If your child doesn't do something, you're not going to do nothing to him. Maybe if you fire him, it doesn't matter. He's still living with you. He doesn't pay rent. You, the person, pay rent. But if a stranger, you fire him, he's in trouble, right? That means your child sometimes might not even fear that you're going to fire him because he's your child. You're something for your husband. If you fire your husband, he's still laughing, right? He's laughing. So hiring a family member, you should have in mind why you're doing it. And it should be a tax strategy. If it's not, you will not take the tax saving that I'm going to show you here. If you don't hire a family member with a tax saving strategy in mind, you will not take what I'm going to show you here. That's the point. Let me add someone just trying to get into the thing. So, if you don't hire a family member as a tax strategy, you will still be losing the tax strategy at some part, right? You will still, you will not take the advantage that is actually there for you to hire a family member. So the last one is wage paid to parent. Wage paid to your parent. So these are the three layers of paying or accounting for some type of wages expense in your business. So you have here a chart employed by parent. You have hiring your spouse. You also have wage paid to your parent. That means actually hiring your parents. So what do you save by hiring your parents? The saving that you have is actually tax-wise, right? Tax-wise for the child, right here. Let's go one by one. For the child, everything that you pay to your child that is under 18 is just income-free money. Income-free says that you will not account for that in your income. It means if your income for the year is $100,000 and you pay your child $30,000, it just means that your income is $70,000, right? So basically, first of all, it accounts as a deduction for you, because whatever you pay to your child, remember, if you didn't record it, you didn't consider your child as an employee in your business, you will not account for this $30,000. Just the way that when you don't consider yourself as an employee, you don't take the portion of money that you spend or you should have spent if you were somebody else working in your company. So over here, you have $30,000 that you can take as an employee's expense. Same thing basically for your spouse, right? Same thing basically for your parents. He is an employee in your company, but the real tax advantage, because this is a deduction. What you are taking here is a deduction, basically, right? And the deduction could be converted into what? Into taxes, yes, right? I just showed you that the $30,000, if you are 10% of it is $3,000. That's tax saving now. 20% of it is $6,000. That's a tax saving. So that is a direct deduction. Now, that's the first level of saving. The second level of saving is what? Is that the payroll tax. Because remember, some people will say, oh, I don't want to hire somebody because of my son because I don't want to pay payroll tax on him. Every employee that you have to actually charge them payroll and also pay payroll tax on them. You have to know, as a business owner, you charge payroll tax on your employees, right? But yourself, for that single employee, you also pay payroll tax on him. There's two different types of federal taxes that you have to account for when you hire somebody. There's what is called the FICA, right? Let me put it in a different color. You have what is called FICA. FICA is basically what? FICA is basically what is called Social Security and Medicaid. Social Security and Medicaid is paid by the employee. When you hire somebody, you have to collect that and give it to the government, which is FICA is actually 6.2 for the Social Security and 1.45. That is 6.65. 6.2 for this person for Social Security and 1.45% for Medicaid, right? Everything combined is like 6.85%. So basically, for each employee that you have to know that if you are an employer, because if you don't do it, then you'll be in trouble with the government, because you're supposed to collect this and give it to the government. That's the Social Security. That's what everybody gets. When they say people are receiving Social Security, it's because other people are paying for it, especially employee, right? So you have to collect it. If you don't, you are in trouble. So even though you try to say, okay, I'm going to account for payroll for my children, and you just charge the $30,000, but you didn't reverse, you didn't remit this to the government, you are in trouble. You have to know that. That's the reason why you actually have to hire a company who does payroll, for them to do your payroll. You don't even need to say, okay, every week I'm paying 500 to my child. Every week you give him 500. It doesn't account. There's no way that document that you are paying employees. Employees mean that you are collecting this, right? So this is FICA. What you also have is FUTA, right? The FUTA is 6%. It's 6%. But FUTA here, 6% is actually paid by the employer, by you, business owner. You are the person paying this one. That's the reason why, as a business owner, the employee pays this one, and you as employer, you have to pay this portion here. But watch this. When you hire your child doesn't pay zero over here. It doesn't matter as soon as your child is under 18 years old. You don't collect FICA on your child. That is 6.85%. And you as a business owner, you don't pay FUTA over here because you are hiring this employee. I don't know if everybody sees this. So what is the saving here basically? What is the saving? So what's the saving here? The saving here is basically out of the income tax saving that you will make by claiming the deduction of your child. Maybe you have 2 children, as long as they are under 18. If you have 2 children, it doesn't matter the number of children. I'm just taking one child, 30%, $30,000, or maybe $20,000. You can simplify the way you want to. It depends on the size of your business. We're not going to say you pay $30,000 to a child if you only make $100,000. Of course, you're not going to pay this to the child. I'm just throwing number here, right? Each company is different. So over here, the saving is actually this is the saving right here. 6.85% of FICA, and also 6% of FUTA. This is FUTA is actually unemployment taxes, by the way. I don't know. I don't want you to ask yourself what it means. FUTA is unemployment insurance. Whenever you have a job, you have to collect unemployment taxes on it for each employee. Actually, you paid for the employee, basically. So basically, these are the 2 savings that your child or your children are providing you. I'm going to come back for all the details, right? Because this is a really big deal right here, and that's what I'm going to develop today. Over here, down here, what do you pay? Over here, hiring your spouse. Hiring your spouse, you don't pay this. If your spouse actually work in the company where you, of course, are members, she works in the corporation where you are also one of the owner of the corporation, you don't pay this. You basically don't pay this for your child, for your spouse. And you don't pay this neither. You don't pay this if your spouse is working in the corporation controlled by you, right? You don't pay that one. So basically, if you are hiring your mom or your dad, you don't pay the FOTA neither. You pay this one, right? You pay the FICA, but you don't pay the FOTA unemployment taxes. So basically, you can see the saving. The saving is basically almost the same. On top of what you will charge here, on top of the deduction, a deduction is also a tax saving because the deduction will reduce the taxable base when you have to figure out your net income. Your net income that will be transferred to your personal income. I'm talking about an unincorporated business. I mean, sole proprietorship. Some people are sole proprietorship or partnership, not a C Corp. This basically doesn't apply to C Corp. I have to tell you that. It doesn't apply to C Corp, right? If it's a C Corp means a corporation owned by 100,000 or so many other people. It's basically for small business owner, right? If you're a small business owner, but most of the time you don't have a C Corp. You have a partnership or a sole proprietorship, right? So this is what you are taking as an advantage. Now I'm going to develop more. I'm going to develop more into the first one because those two second one I'm not going to develop on it today because it doesn't always apply. It will take me 45 more minutes if I have to do this today. That's the reason why I will send all the details of this portion to a next live. But at least I already told you what hopefully you can get. But the detail and the exception, I will not go into this because I don't want the webinar or the live to be 2 hours long. Okay? So I will focus on this first one, the child. Because most of people have children. The children is even your dependent, right? Somebody lives in your house. So basically, what do you have here? I'm going to remove all of this because I say I'm not going to go into a lot of details on the parents or the wife or the spouse. But this one is a big deal because every business owner has to do that, right? Every business owner has to do this. So what do you have to know here is that first of all, it has to be, like I said earlier, an incorporated business. An incorporated business means it's not at C Corp. It should be a sole proprietorship or a partnership. Which is basically what they call LLC, right? But there are so many type of partnership business entities, not only LLC. I don't want you to think it's only LLC. Any type of business that is not S Corp or C Corp. Because this type of business doesn't belong to people. It belongs to the people who has share on the business. But these other people, they belong to people individually. That's the reason why they don't consider it as an incorporated business tax-wise. They don't see those businesses as an incorporated business. They are an unincorporated business. That's the reason why when you file taxes on this, the net income will pass through the business to go to you. And they also call them pass-through entity, right? When you have stuff for business, the net income will go through the business to you. So, in order to take this advantage from your child, the business has to be what? A sole proprietorship. That means it's not an LLC. It's just like you. You just register the business as a sole proprietorship. People know what it is. Or it's a partnership. The child has to be under 17. Under 17. Or under 18 years old. Right? Under 18 years old. So, I have an example. I have a customer. I'm going to school right here how much he saved for his child, his daughter, working for him. It's actually a girl. The customer was a lady. So her daughter works for her. Her daughter is 18 years old, 17 years old. She was working for her for $18 per hour, right? Hiring your child, $18 per hour. The first saving that she gets is what? Is that 18 times 4, times 40, because 40 hours a week. 18 times 4, times 62, because 1 year has 62 weeks, right? Times 52. How much it is? I think I have a calculator somewhere here. Where's my calculator? Okay, I have it here. So 18 times 40 times 52. That is $37,000. 37,400. That's first of all that she was able to write off on her gross sales for her business. That's because I talked to her the year before. She was telling me how the child will actually assist her on the business, right? She was able to cut this off. Besides that, we have to calculate now the FICA that she saved. The FICA that she saved was what? That is 6.85%. That was how much? That was 2,321. 2,341, I think. 2,321. Now, what she saved here, now over here, this is on the first 7,000. The photo is only on the first $7,000. So what she saved here was 7,000 times 7%, which is 420. So tax-wise, payroll tax-wise, because what I'm talking about here is it's mostly payroll tax only. Payroll tax saving here is 2,300 plus 420. That is basically $2,741 that she was able to save this year when she was doing, she saved that during the year 2019. She saved $2,741 by hiring her child. And that's not all she saved, because what she also saved is the taxable portion of this amount, because this amount was supposed to be taxed on her income, right? So that is roughly what you will save as a business owner. But now, what happened? They said that if it's a corporation, you cannot do it. That means if the business is registered as a corporation, maybe because you are in the business, or, oh, there's something. Over here, in the partnership, I have to say something here. In the partnership, both parents should be the parents of the child. If the partnership has so many members, right, the partnership will be with one member, single member, LLC, or it could be with 2 members, or 4 members, or 10 members. The condition here, because a lot of questions will be raised, the condition is that all the members of the partnership should be the parents of the child over here. That means if there are 3 members, it doesn't apply. It really doesn't apply no more, because there's one member that is a non-parent member, right? Over here, if you have your mom, you have your dad, or both of you are partner of the business, a big company, but only both of you are members, then it applies. But if there's a non-member, it really doesn't apply, unless you do something that I'm going to disclose here. So the other thing is that if the business is an S Corp or an C Corp, you cannot take it here. You will treat your child as a normal employee, just a normal employee that you hire outside, by recruiting, right? So basically, what to do if that happens? So the C corp here, it means that your business is a corporation. Maybe you are the single members, right? But you register the business as a what? Corporation. Or maybe you are not a single member. There are 10 people within the company, so that it doesn't really belong to you, right? So what to do here, right? I'm pretty sure I know many business owners are under this category here, whether they are sole proprietor or they are a member of the LLC. But if this happens, what do you do to take advantage of this one that I just showed here? This is a advanced tax strategy right here, right? That is what I'm discussing with you here. Is an advanced tax strategy that you will only get this if you have to hire a CPA for maybe 1,000 or 2,000 for him to show you all of this. Okay? So I'm going to show you something now. If you find yourself that you are not both are not the parent or the child, or you yourself doesn't have an LLC, what do? The hybrid strategy that we do is what? Is put something in between the company and your child, right? You put something on a hybrid company. I know you guys never heard about that. What is called family managed company. Family management company. Basically, this is like the company that you will create. You will actually set up this thing. Let's say you have a corporation, right? And you work within the corporation. But I just said just the entity of the corporation doesn't allow you to charge the child, or maybe because here you have so many partners, they don't allow you to take this advantage here. You create a family management company. That family management company will actually be the person or the entity hiring your child. Because this family management company, look at the name, family. That means it's only owned by you or your wife. You will be the person within the family company. The family management company will actually hire your child and actually apply this. So this will be, the family company will actually manage the job of your child and account for it. Yeah, who has a question? Do we have a question before we proceed? And Carol, you have a question? Francois, you have a question? Okay, over here, I was saying that what will this company do? Basically, it will manage and record anything that the child is performing in the corporation. That is basically what it will do. And I don't know want to go into more detail on it, and I don't want you to get lost. I'm just telling you that this is the way that they call it sometimes creative strategy, right? Because now you are establishing something. But you have to think about, are you able to save all of this just by creating this? Yes. Because if you don't, maybe you have 2 children within the company. All the children will be managed by this company right here. Basically, that is what it means. And now you'll be able to take all this tax-free money. So, I didn't want this to be too long. It's over, but I won't go into all the detail because I just told you what it is. If you are interested to actually doing this, you will just need to consult your CPA, and he will not charge you a lot. You just tell him that I want to do this because you already know what is it about. Tell him that I have a child, I know that he is under 17, I don't have to pay taxes, but because it's a corporation, is that the way that you can help me to do this, and so on. Now, what type of job can your child do in your company, right? What type of employment can you offer your children? Because remember, we are in the country of law. There's some type of job that you cannot give to your child, right? But there are a lot more of opportunity of job that you can offer to your company. And I'm going to leave a link to give you all the details. I'm giving you a free book, free ebook, that you will see all the details of only this one. It's a 19 or 20 pages ebook, only to actually implement this for yourself as a business owner. Okay? That means if you are a business owner, you use that guide. It tells you how it goes, exactly what you should expect. And not only that, I give you more than 30 different jobs that you can assign to your child. Now I have some of them here. One of them is what? You can, for example, hire your child to make coffee or tea for office workers, office employees. That's a job on the tax law. You can, for example, what can you do? You can hire your child to create and distribute marketing material. It means that you have what is called a business card or whatever, flyers that you want somebody to actually distribute it. Most of business owners, they ask their children to do it, right? When you have flyers, you'll be like, oh, can you please go to this? Can you go to the post office and send each of these mail to this company? Can you do this? Yeah, they all do that. Now they're telling you it's a job that you can hire your child for. You can have your children giving coffee or tea to people. I'm not making it up. That's what is within the law. You can actually hire your child to test products. You are manufacturing something, manufacturing company. You just take it every night. You take it, give it to your child to test it, to see if your child is not 2 years old. He's 17 years or 16 or 15 years old. Those people sometimes are even smarter than us, right? Are using electronic devices. You have something, you give it to him. Can you test it? So your child can actually be testing your product, right? So you can hire your child to clean the office. Something that you will do it by yourself, because if you don't want to hire a cleaning company, you can hire your son or your daughter to actually clean your office or your practice every day. Like you have to clean it every day, right? That's a full-time job, because she has to clean in the morning, maybe at noon, and maybe at the end of the day also. So you can hire your child to wash uniform and towels. Maybe you are involved in some type of business where uniforms are worn by employees, right? You can hire your son or your child to actually just take them, put them in the washer and dryer, maybe in your own house, and bring it tomorrow. So you have a list of I have more than 30 that you also find in that guide that I'm going to put available for you guys, business owner. And I don't know what else you have to do here. Okay. One last thing that you have to do is that, because the government know that people will do that to actually evade taxes. But tax evasion is when you do it knowingly that you are just trying to avoid paying taxes, right? Then what you have to do here is that the government wants you, for it to be legal, you just have to document everything that the job is performed by your child. Normally, the good conduct of business will require that you actually record all of them, right? It's just a normal business practice to perform any task. If you are your own business owner, even when you have to have food, you have to record how much you paid for food, right? So basically, yes, this is the point here, is that the only requirement by the IRS, the big requirement by the IRS is that you have to record recording. You have to record the work schedule. What time, from what time does your child works? If there is a time sheet system or clock in system. They want to see that your child actually clock in and clock out, just like every employees. They don't want you to stay home and just every day, all of a sudden, you just say, okay, I pay my child this. You have to just actually consider your child as actually an employee, right? Because you are taking expenses for that child. If you are paying the same system you have in place for any other employees, you have to do the same thing for your child. The job that is performed, you have to record that. Because I just told you, the last thing here is you have to go around the S code and C code. And this is something that exists. I don't make it up. You just need to be able to find it. That's the reason we say that the tax law is almost like 6,000 or 4,000 like pages that we need to look. And every year or anytime you will always find new tax strategy. A single business owner will never find, like, I don't even know what percentage of it. Unless you want to spend 1 year, you can do it. You spend 1 year to discover all the opportunity that you can take for your business. You can do that yourself. You find it. But as a tax strategist over here, in order to actually implement this, I highly recommend you guys to actually consult with your tax strategist or your CPA on how to implement this, right? I just told you that is available for you. Now, just consult with the tax strategist to actually put to see if the job, of course, I'm going to give the list, but the list is not exhaustive because you can also have different jobs that you want to assign to your child, right? Your CPA or your tax strategist will tell you if that will fall into what you can hire your son or your daughters for. So yes, so I'm pretty done with this one. I don't know if you have question. If you don't have question, I will stop the live because we're also working on Facebook Live. I will stop the live and finish the session on the Facebook group, which is the Zoom call. Carol, do you have a question? Hello? Carol? Carol? Okay, nobody has a question. So yes, sorry, I'm not able to read all the messages on the Facebook page, but I will actually reply to those messages once I finish with this webinar. Okay, the last thing I wanted to add before I stop the live, because people are also watching on Facebook, is that I'm done with this one. Okay, I'm done with this. I'm done with this for today. And the only thing is the PPP. I'm going to share this. If people in the live are not in the group, I'm just sharing this with them. Just a reminder again that the PPP program that ended almost a month ago now, I'm pretty sure, I think this program, this money is due for forgiveness for so many business owners who actually receive the money, right? It's due for so many business owners that receive that money. The only thing you have to do here, I said that on the previous or last week webinar, was that you have to make those money 100% forgivable before you actually ask the government to forgive it. Okay? When I say it actually came to maturity. It was an 8-week period that you can also change it to 24 weeks period. But you have to check. You have to check to see if all the money is forgivable, the 100% is forgivable. And for that, I created, as I'm working, like I'm working physically with other people, I also created this program that is called the PPP Expense Tracker. The PPS Spend Tracker is a program that's a smart spreadsheet basically that actually helps you to know how much will be forgivable out of the money that you receive. So out of the money that you receive, not all the money will be forgivable. It was given to you as a loan. Depending on what you use the money for, some will be forgivable, some will not. In order to know what will be forgivable, you actually have to plug this number into this application right here. And when you plug this, it will tell you how much is forgivable. If 100% is not forgivable, then you will know what to do, what portion is not forgivable, and you will allocate some more expense to reach the amount of money that is not forgivable. When you reach that, the forgiveness will go up to 100%. At that point, you can now contact me to officially ask the government to say, yes, the money is free to use. If you go now to say, I want the forgiveness, the government will assume, if you don't have all the detail of when and what was used for what, you will be surprised that they give you $7,000 or $5,000. They will tell you that you owe $3,000 out of it. And you use all the money already, and you told them it's forgivable. Yes, maybe it's forgivable, but you didn't actually put everything into perspective to show them that it's forgivable. So that is basically the last part that I wanted to share with you today. And I'm going to stop the live on Facebook and talk about the last part of this in the Zoom call. So it was a pleasure again to share this moment with you guys, Facebook friend, and I hope to see you next time, which is mostly probably next week. Thank you.